Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Wednesday, February 18th, and my name is Raleigh White, and I'm coming to you live from a nice day here. It's a little overcast, but the weather's definitely warm here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a continued focus on day trading the SPY. Now, he's going to begin by giving us a midday market analysis and an updated watch list for those large cap stocks that he currently has his eyes on. Then we're going to pivot and he's going to talk about the Trading Zone Live and the setups that he likes to look for. He's going to share with us the primary tools and filters and indicators that he likes to use and the importance of the market internals dashboard and how he uses it. He's also going to talk about the levels that he uses, those that he plots every morning for you, okay, in the major indexes and the VWAP and the Master Blaster Disaster Oscillator that all help him confirm entries into the markets and when to take exits. And as a bonus, I'm hoping we'll be able to look at some potential live trading in the index markets and the use of options. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with his presentation. And folks, the chat window is open to everyone, but we do have some ground rules here. Always be kind and supportive in your posts. Please keep to the topic, folks. No political discussions allowed whatsoever. And keep those side conversations between you and somebody else to a bare minimum, because this is not a chat room, okay? We're here to basically listen and to learn from what Roger's sharing with us because he's here to give us an edge and to help us all become much more confident and consistent in our trading activities. Now, if you were with us this morning at 8 o'clock Eastern Time for Roger's pre-market briefing, you'll note that there were several catalysts on tap that we needed to be aware of. The Magnificent Seven, we saw that Amazon, Tesla, and NVIDIA were all up about 1% coming into the open. We noted that on the chip side, in the chip sector, that Micron and ARM and ON were also up 1% coming into the open. On the tech business services front, we noted that PanW was down 6%. And on the business services front, FRSK was going to be releasing their earnings before market open. On the finance and the health front, we saw that MCO was going to be releasing their earnings before market open. And on health, CRL and PODD also releasing their earnings before market open. On the international front, we noted that the Euro stocks was up 1% and the Nikkei was up for 1%. And folks, the Shanghai market has been closed for a week for the lunar holidays there. As far as the Fed is concerned, we know that we had a goods report coming out, industrial production coming out, housing data coming out. We have a 2-year bond option coming up, and we have the FOMC minutes being released. So for those of you that are wondering, what are these catalysts all about and why do we even talk about them? Well, from Roger's perspective, any information that is either known or will become known during today's trading session, well, that represents a volatility flashpoint. For example, in the health sector, we know that CRL and PODD are going to release their earnings before market open. That's not yet priced into the market. So from that standpoint, if we're looking at trading stocks in the health sector, it might be good to wait to see for those earnings releases to come out so that it doesn't impact a decision we're going to make. And that's how we use these catalysts. The other thing I'd like to share about catalysts is that when we report a company like PanW or ARM or Amazon, we're only focused on the S&P 500 stocks, okay? There are a lot of stocks that are releasing earnings out there, but the ones we focus on as far as them being catalysts are S&P 500 stocks, and we're looking for at least 1% moves to consider them as potential catalyst candidates. Now, as far as Roger's pre-market stock watch list is concerned, there were 20 stocks that are on his watch list, 8 to the short side and 12 to the long side. You'll note that FRT and JBHT both have an asterisk next to them. That means that when Roger was looking at these, he says, you know what, folks, these are setting up to look like decent A-line potential entries. Now, Every one of these tickers are legitimate stocks that Roger feels has the potential to be a trade that he's going to take. Now, just because they're on the watch list doesn't mean you just automatically take them. They have to basically meet his setup criteria. And usually, what he'll do when he shares these tickers with us in the pre market briefing, he'll also talk a little about exactly what he's looking to see to consider the trade. For example, on a short trade, he might be looking for a stock to break below the 200 moving average before he considers it. Those are all great tip offs as to when you might want to consider engaging with these stocks. Now, as far as Roger's pre market thoughts are concerned, we noted that the futures markets were higher coming into the open, led by a rise in NASDAQ stocks. Okay. And this is the reverse of yesterday, where the markets were lower because NASDAQ was leading the futures markets lower. We also noted when Roger brought up the put to call ratio chart that they are in balance, favoring the put. So they're starting to get a little bit toppy on that side. But he also did note that the VIX was down below 20, and he hopes it considers to move lower below that 18 level. As far as momentum is concerned, Momo's up. The number of companies that are having 20 and 90-day highs significantly outpacing those that are below 20 or 90-day lows. As far as sector rotation is concerned, things definitely continue to favor defensive stocks, but we did note that the speculative stocks are on the rise, and we could be potentially looking. Well, Roger's just really kind of hoping that we see another sector rotation where we see the speculative stocks at the top of the list and the defensive stocks a little bit lower. We also noted that the bonds were up today, and once again, from his perspective, that's more a flight to quality, a flight to safety. Money moving out of the markets and people basically putting them in cash and into bonds. We also noted that the SPY, the QQQ, the MAGs, and the SMH were all sitting there at key support levels, the 200 moving average, the 100, the 50 moving average. And from his perspective, he says, you know what? I'm cautiously optimistic that we might see a little bit of a bounce today. So he said, we'll see what happens when the market's going up. But he felt like things were indicating that these indexes were going to move off that area of support. And in fact, as a matter of fact, when we go through the midday analysis that he does, we'll see that that's in fact what has happened with several of these indexes. So once again, folks, we want to thank you so much for coming today. We have a great group of people here. Roger's community here is fantastic. We're a big family, all supportive, and Roger does not take that for granted whatsoever. And today, as he usually does, he's put together a pretty decent agenda for what he wants to talk about. Now, from that standpoint, we're going to have a continuing focus, on day trading the SPY, but Roger will open up with his midday market analysis and an updated watch list. Then we're going to pivot and talk about the trading zone live and the setups to look for. Okay. Roger's going to share the primary tools, filters, and indicators that he likes to use, the importance of the market internals dashboard, how he likes to use those daily levels he plots every morning for us, the VWAP and the Master Blaster Disaster Oscillator. That's got to be the best name for an oscillator ever. And finally, folks, as a bonus, we're hoping to see if we can do some potential live trading in the index markets and the options that we use associated with that. So if you've got questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also, folks, the chat window is open to everyone. And remember, we do have some ground rules. Number one, always be kind and supportive in your posts. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. And also, keep those side conversations between you and someone else to a minimum. This is not a chat room, folks. We're here to actually listen and learn the information and education that Roger's going to be sharing with us because he's here to give us an edge and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's say hi to the team. I want to start by saying hi to Matt. Matt, I know that you have been busy this morning. You've been doing great. Matter of fact, you've had 3 trades, all winners, but you and Roger can talk about that just in a little bit. But you are definitely on fire, dude.
Yeah, we're having another good day so far.
Yeah,
Yeah,
absolutely. And Roger, always great to see you, my man.
you
And
as well.
Interesting once again. I mean, I know that you constantly say, look, guys, I don't like the forecast. I just tell you what I see and what I hope. But man, you are right more often than you are wrong. Your expectation today was that the markets were going to bounce off those critical support levels. And I'm just looking at the SPY and the QQQ, and they've listened to you.
They did. There was a few key things that I brought up to everybody's attention. Let me show you what those key things were. Um, just to make sure that can you see my screen?
Yes.
Yeah.
Okay. Okay. So here were the things that I showed you this morning. So you can't come and say to me, well, this is all just Monday back quarterbacking. So here's the things that I showed you this morning. I showed you the VIX. And this morning I said that we couldn't get above this level. And the odds are we're going to come down, and now we're going to come to this level. I said it this morning. I was very clear on that. So that was one of the things that I showed everybody this morning, and I said this is very positive that we couldn't break this level yesterday, okay? The second, and we should be now coming down all the way here. That's the first thing that I said. The second thing that I said was, here, to put the call ratio. We were in this level for 3 days. That means puts really were holding on. They were really, really holding on. We don't really look at it intraday because it's all over the place. We look at it the next morning. So we're going to look at it tomorrow morning. But right now, as of right now, you can very, very clearly see that this said that the put buyers were starting to get a little ahead of themselves. Okay, right here. That was number 2. Number 3, I told you that I really liked how we bottomed out on SMH at the 8 and the 15-day here. And I drew this trend line for you. And I told you that this trend line should stay. And that I like how we're opening up above the 8-day, which I told you this morning. Then I said, I really liked how yesterday, how MAGs defended the 200-day moving average and how they stayed there, and how this usually offers a very good support level for a bounce. The word I used was a bounce for the market. I said we usually bounce pretty good around the 200-day. I did say that too. And then I also told you guys that the SPY did a good job yesterday of defending the 100-day moving average. And I drew this line for you right here and told you that from where I'm sitting, we're going to be going back and forth. And since we came down here yesterday, the next level I said was I want to see us get above the 50-day moving average. And we're struggling, and not struggling really, but we're working our way up right now on there. So there was not 1, not 2. There was 4 or 5 things that I told you, and they were all consistent. And I would dare just about anybody to come here and tell me that I did not say that 3 hours ago. It's all on video. You can watch it.
Yeah, it was perfect, Roger. And once again, you were just sharing with people what you hoped would happen based on what you saw.
Exactly. I had no idea what's going to happen. I can't predict the future, but I could tell you that every time that we hit the 100 and we bounce off, we hit the 200, we bounce off, we hit the 8-day, we bounce off, momentum levels, volatility. I could tell you that 8 or 9 out of 10 times, all those things can happen. This is what happens. If you go outside and you see sunny weather, low humidity, clear skies, and it's June, you're probably not going to tell people it's going to be 23 degrees tomorrow, and it's going to be raining, right? It's the same thing. You kind of just, you kind of, like I always tell folks, it's like watching a soap opera. You're not going to know exactly what's going to happen next. But if you sit down with somebody and you miss an episode and they saw the episode, you guys can have a very, very fast conversation about what you missed. And that's how I see the markets. It's just a never-ending soap opera.
Yep.
And we're like, this guy's doing this, and most of them, they play the same roles over and over and over again, and because that's just how life works. Because all of these things that they do is based on human emotions. And my friends, I'm going to tell you a little secret. People are so predictable that it's sick. Okay? People are extremely predictable. So as long as people can continue to be predictable, these things will work. Everything I do is not based on math. It's based on human emotions.
You bet. And some people will ask the question, Roger. So, I mean, what the heck happened? I mean, why do things bounce off this? And you tell them
Well,
over and over again, the institutions, they pay attention to these levels.
And the publishers, they tried to fit a story. They try to fit a story so it makes sense with what you're seeing. But the truth is, those stories don't have anything to do with what's happening. And I showed people this morning. Yesterday, Alexander, the guy who writes for Barchart, was saying how investors don't like AI anymore. They're selling AI. The reason markets are lower is because they're selling AI. There's a lot of concerns about AI. There's a lot of fear about AI and how it's affecting other companies and other valuations. And what did I tell you guys? I said, listen, and this morning, everything was great. They loved AI. This morning, there was no more fears. Everybody loved AI. And I told you guys, I said, listen, the fact that these companies are spending more money is like the best thing that could possibly be happening. It means they have huge demand. They're not spending money to cover their ass. They're spending money to invest in the future. I'm telling you how we're having copper shortages. Basic materials are running out. Are we going to have a Terminator 3 coming to our house and sit next to me? No, that's going to take another 10 years. There's nothing disrupting anything. Stop this whole disrupting. Listen to me. Listen, folks. In my opinion, you know what AI is? Having an intellectual conversation with something that's not human. That's AI, okay? And to me, AI is something that can get up and do things for you, like fix the roof, like walk your dog, like heat up your coffee, like get your clothes from the closet, like the things that you see on Jetsons. Folks, we're about 10 years away from that. So there's no disruptions anywhere, okay? This morning when I went to work, I still saw gardeners doing my lawn work, okay? And if you think it's going to change in the next 5 years, let's make a bet. Things take way slower to adapt. We're still having problems with we're still trying to get 4K on cable. Okay, I just got digital cable modem. What is it called? The fiber optic modem, like a year ago in my area. Okay, so take it easy. Let's not get ahead of ourselves. Okay, let's all calm down. Okay. People are amazing. Technology, we're not in the Buck Rogers era yet. Like I said, when I have grandkids, that's when it's going to happen. We're not there yet, okay? We're a good 10 years away. 10 years away. So there's no disruptions. There's no problems with technology. There never was a problem with technology. There was never any problems with valuations. Everything is absolutely peachy. And these companies like ADI last night continues to come out time and time again and telling you, hey, we're doing really, really well. We're doing really, really well. This is why semiconductors are, this is the all-time high. And we're like, look at where we're at, Raleigh.
Exactly.
I mean, this is not, so forget about, here we hate AI. Here we love AI. It doesn't work that way, folks. It doesn't work. Stop reading paper and just start looking at charts. The money will tell you everything you need to know. Okay, I just wanted to get that out of my system.
No, it was great because it's highly topical, and the only other question that came up, Roger, before we get into the meat that we might want to talk about is I know that there's some talk this Friday about the Supreme Court potentially doing a tariff thing.
Yes.
I don't know if that's going to happen because I know here's what it is. The Supreme Court on Friday is officially opening its next session. The question is the first thing they're going to do in the next session be about tariffs? And that's a coin flip. But a lot of people, and in this chat panel, are asking the question, Roger, depending on what they do, how do we hedge for that? How do we take advantage of that? Is this more like, well, let's just wait and see what happens? Or, as you talked a little bit about today and yesterday, the impact on retailers could be significant.
Well, let me ask you guys a question. Let me ask folks here an interesting question. I want to ask folks an interesting question. I actually want to get your feedback on this. I want to see what you guys think, and then I'll tell you my opinion, okay? So let me just open up the chat real quick. So, how many of you think that the decision will impact the market negatively versus positively? How many of you think that? So just write negative, positive, negative, positive. Okay, positive. Okay. Okay. All right. So let me tell you. So for everybody who says the decision is going to be negative, let me give you some information. Let me give you some feedback. Okay. Okay. So as we all know, the odds are strongly over. Well, let me ask you one last question. How many of you think that it's going to be tariffs stay versus tariffs go? Just write stay or go. Let's see what people say. Okay, go, stay, go. A few stays, about 30% stay. Okay. So let me just tell you two things. Let me just say a few things, okay? Let me just say a few things. The last time the market was supposed to come out with a decision, which was like 3 weeks ago, the market started, retailers and retailer stocks and consumer discretionary stocks, they started going up a day before, and they stopped going up the minute we found out that the federal government was not, that the Supreme Court was not going to announce anything. Okay? So let me just say this again. I was watching the market for 24 hours, and when the market thought the decision was going to come out, okay, the market was going up nonstop. And the second we found out that they were not going to do anything, it dropped. So, number one, so we already know based on that there's a huge bullish move intended if it doesn't come true. Okay, I don't know how long it'll last, but that's what we know. That gave us a lot of information. Okay, that gave us a lot of information. Second of all, as you all know, these tariffs increase the cost of goods. And I'm not going to get into politics about who pays for it. We all know who's paying for these things, but it doesn't matter. So companies like Amazon and other retailers, they would be in a much, and I'm going to say much another 10 times better position without these tariffs. I hope everybody understands that. So automatically, and we already know the decision is not in favor of the Supreme of the president, based on what we've been hearing, based on the two previous court rulings, based on the fact that what he's trying to do is completely unconstitutional, and based on the fact that the Supreme Court was pretty much going, "What are you trying to do? What?" Okay, so the odds on Wall Street are very much against the tariffs going through. Doesn't mean anything. The Supreme Court can give him another year to get rid of it or whatever. But I'm telling you, based on the two things that I know, based on the fact that last time when the decision was about to come out, the market was going up like crazy, number one, and based on the fact that we've already had feedback on these tariffs, this decision would be very bullish for the market, folks. This would be extremely bullish for the market. I hope you guys understand that. Okay? And I'm not telling you what I think. I'm telling you two things based on what I've seen and what the sentiment is, and the last two decisions that have already come out. So I'm not just blowing smoke. I'm telling you based on that. We are doing to that. That's not going to help us half fuller. What's going to help us is knowing how the market reacts. The market, in my opinion, based on what we've seen before, would be extremely bullish heading into this decision. Like making a new 52-week high, bullish on this decision. And the decision will probably be no soup for you, Mr. Trump, but we're going to give you a nice clean way out of this. In other words, we're going to give you a year or whatever, or so there's going to be, or maybe they'll split the baby. But I know that every time, we've been coming up to this decision, That the markets have been going straight up, driven by retail. So so we know how the market feels based on this. So I'm not telling you anything. I'm not telling you what I think. I'm not telling you what I feel. I'm telling you what I've seen already happen. So we'll go from there. All right. So I wouldn't worry about it too much. I think it'll be like the best thing in the world. I personally think, let me tell you, I'll go further. It would make retail go up like crazy.
Yes.
Sandra.
Yep.
So let me show you something. Gold. Remember, commodities are much bigger than stocks, right? Look at gold. No movement. No movement. Look at US here. Look at US dollar. Just choppy. Look at energy prices. A lot of this is going to be impacted. A lot of this is being impacted by this looming tariff decision. And Lee's 100% right. Nobody knows what's going to happen, ever. But I do know one thing, that the last 2 times they were going to come out, the market was going up and literally stopped dead in its tracks the second they said no decision today. Like, it was doing this, and it was like, whoop, back down. So
that's the key thing, Roger. At this point in time, if I was a betting person, I would not bet on anything happening on Friday. Once again, the only thing we know for sure is that the Supreme Court is opening their next session.
Yes.
That's all we know for a fact. Will they decide on this Friday?
Yes.
And somebody wrote in here, they usually save the big announcements for June and July. I just don't, we just don't know.
We'll see. And by the way, Matthew, we don't have a legal binding agreement with any country yet on tariffs. We don't have a legally binding agreement with one country yet on tariffs. Just so you guys know. Not one. All this is just agreements to agree on agreements to agree. These things are this fat, and they have to be signed by everybody. Okay.
Exactly.
Let's not. No,
Roger, thank you. Once again, so many people asked the question. I thought it was worth spending about 5-8 minutes on it, and getting your perspective on it. And we have a lot of things to talk about here, folks. So let's move on from tariffs and let's get into the meat of this discussion.
Exactly. So the question is, where do we go from here? Real simple. And let me pull up TC2000. Easier to work this way. By the way, Micron and other chips had a beautiful run up today. I'm still holding this for obvious reasons. So if you look at the SPY, you'll see just a lot of chop. But we're now above the 50-day moving average. That is very, very nice. We just need some more follow through. We still have crazy amount of resistance at this 696 level. Okay? We have a crazy resistance at this 696 level. And I don't know what will happen, but this right here is where we don't have as much meat here. We have most of it here. So there's a big liquidity pocket here. So this will determine where we go. I think we're going to get here. Okay. So let's see how that plays out. SMH is very bullish. We have a beautiful A line right now on semiconductors, which is one of my favorite patterns. We're still coming off of this move here. I liked how we went down and came back up here, and we're pretty much sitting at the highs. That's very, very all right. And so we could do that. And yes, it looks very, very good. Oh, God, you guys are funny. You guys are very funny. All right. So, and we have recovered 60% of this candle. Yeah, we've definitely recovered more than 60% of this candle. We're like at 80% of this candle right here. No, Angie, no 265 for us as of right now. We're way past that level. That was my breakout level that I gave you guys right here back in the day. We're way past that level. But it was a good run for a while. All right. So QQQ need to get above. We have a long ways to go. We need to get here. And I think we're going to get here or here and test and see what happens. you know? You know? So we got to be careful. We got to be careful. We're still in chop chop zone. RSP, on the other hand, is looking fantastic. So in theory, if the mags continue running up, this will really push the SPY to look like this, which is what we want. Happy birthday, Angie. Wishing you all the best. Angie's been here with us for a long time. Happy birthday, Angie. Happy birthday. All right. So let me do this. I want to give you stocks. I want to give you stocks that I like right now to the short side and long side. And that's the other thing, Raleigh. I just remembered. I just reminded myself that this morning and yesterday I was showing folks bearish stocks, and I was saying how I don't really like. There's not really any momentum to the downside.
Way overextended and
Yeah,
steep ADX.
They were,
Yep.
They were like they weren't like this. They were like this. They were like whoop, and there wasn't that many of them. So it was kind of like there's really nothing to the downside right now. Nothing at all to the downside. Matt, can you hook me up?
Mm-hmm.
Thank you. So there's not much going on to the downside. So I'm actually liking the upside more and more and more and more. Okay. All right. With that said, I'm going to give you some stocks, and thank you, sir. And then what I'm going to do is I'm going to give Matt the floor, and he's going to walk you through what we were doing in the trading zone yesterday and today and what he was using to get there, and then I'll do some edumacation. All right. All right. So BBNX. Look at how it consolidates, right? Look at how it consolidates, and look at how it breaks down. You got to start looking at these things like channels. See how channel breakdown volume? High volume on a breakdown below channel. That's very nice. It's very nice, very desirable. Fox A. Bunch of high volume bars. We consolidate. We don't move up on high volume. That's a high probability trade, and we haven't been here in a while. Okay. Again, I'm just showing you what I'm thinking and what I'm seeing. BRZE. Look at the quality of this trend. Look at the quality of this trend. Look how predictable this trend looks. Look how it just gets up to the 8, and then it just like this, and then falls right down.
Mm-hmm.
Okay. BL, black line. As soon as it breaks this level, high volume bars almost every single day. Okay. HPQ. Look at how clean the stock trends. Look how it's breaking down. It's very, very nice. Took a little pause, breaking down again. Volume is increasing. It's very nice. I've given you the stock many times. This is a very clean trend right here. This is not the first time I've given you this stock. Okay? No surprises, just keeps moving along the 8-day EMA. Just keeps moving along the 8-day. CRM. High volume consolidation, compression, starting to break down again. Right at the hit the 8-day. What's the lowest risk entry opportunities? The intersection between the long-term trend and the short-term trend, right? Okay. Team. See, nice, short, high volume, meaningful move. Gave this to you several days ago. It's doing exactly the same thing it was doing 2 days ago, 3 days ago. And GTLB. Again, nice, clean trend. Here, I remember giving you an example right here, how it's consolidating, and then it's going to trend down again, and then it does it right here, it comes down, does it right here, and it comes down. Just keeps doing that. Keeps walking down those stairs, right? Okay. That's the short side. Those are all the stocks I'm looking to short. You would take advantage of this by buying a put, by shorting the stock, by doing a bear call spread. I did a bear call spread on Tesla earlier this week, and it was a good trade. So there's different ways to take advantage of this, but these are stocks on my watch list. Let's do the long side now. Teradyne, nice pullback to the 8-day, right there. Thank you, Richie, for helping out. I appreciate it. WDC, beautiful, just beautiful, beautiful. LRCX, look at that. If that's not an A line, I don't know what is. Right? Let's test it. Let's see if it's valid. Bingo. Beautiful. If I wasn't long Micron, I'd definitely be long this stock right now, as a matter of fact. Beautiful stock. And Micron is in the same boat, by the way. Just FYI, it's in the same boat. Dollar Tree. Dollar Tree looks great right now. I'm really giving you guys red meat here. Yep. Right there. There's your nice breakout here. Dollar Tree, PHM, Pulte Homes, nice clean trend. MNST. It's very nice. Very, very nice. MNST. Wow, good for you, Adam. Almost 14K in 7 days. Excellent. MNST, HST, Host Hotels. RTX, back on our list. Yes, RTX, as I just said it. CC. That's the first time I think I've ever have the stock. I don't remember having this stock before on our watch list. But it's look how it moves up. It goes away. It gets away from the 8-day. It comes right back to the 8-day. Down. Look at this, down to like a tick or whatever, and it comes back up. That's an A line, my friends. That's an A line. Again, I've never traded the stock. Just Sienna. I am looking for a pullback so I can get into this stock at the V. I'm looking at a pullback on Sienna and WDC right now. I want to get in somewhere around the pullback. I'm just being really patient right now. Remember, though, some of these will have earnings. Some of these are better suited for day trades versus swing trades. Some of these are better suited for swing trades. So there's something for everybody here. But these are stocks I'm watching right now. That's nice right here, Vic. Consumer stocks are starting to come up. That's a very, very positive sign. Very positive sign. Some are not. Yeah, as Brian said, some are less liquid than others. I mean, there's, you guys have to do some work. This is a beauty right now. Ross Store. Look at that, Raleigh. Nice trend, huh?
Beautiful.
Beautiful. Just a beauty right there. DAR. No, you might or might not have noticed that I tried to look for clean setups. Mm-hmm. Clean setups. Every time you find yourself a clean setup, you increase your odds of making money. And here's CAMT. Try to find stocks that are not too far away from the 8-day. If you do look for stocks that are too far above the 8-day, you want to make sure they have a lot of volume so they can carry that weight, and those are good day trades. So, for example, They're all really close to the 8-day. Let's see if I could find like right now. See how the stock is all the way up here right now? Look at that. That's a very nice trend. It's got higher than average volume today. That's kind of you want these kind of moves if you're going to be shooting up here. And yeah, thank you for doing that. Raleigh just posted how I look at options. Now, what I want Matt to do for the next few minutes is, and Matt, take all the time you want. I want you to take your screen and show folks what you did yesterday and what you're doing right now on the SPY, and how you're making those decisions and so forth. Matt made almost 20 points yesterday on the SPY. To give you an analogy, that's like trading Micron or WDC and making 15 points in one day on several trades. Okay. That's probably the best trading day I've ever seen in my life. And I've seen a lot of trading days. That's huge. Okay. To get 20 points in one day from the SPY is you could have probably made in a good account 50K, 100K yesterday. I'm not kidding. If you knew what you were doing and if you trusted your trading and you had good leverage. Maybe some of you did. But it was an amazing day. So Matt's going to show you here. Take the screen, Matt.
Yep.
And I got such nice feedback today from folks this morning and so many nice emails. So show folks what you were doing and show folks what we do in the Trading Zone Live.
Get my screen share going. Number 3.
Yeah, Richie makes a good point. He made 20 points on a day when the SPY only moved 10. No, it's true. No,
yeah,
no
I did
joke.
think that was pretty cool.
Yep.
That's what I
Double
mean.
the
That's
price action.
cool. He was going long, short. He was everywhere. So go ahead,
Ping
Matt.
pong.
Go ahead. Yeah. It was fantastic.
So I have a couple different ways we can go through this. See what you guys kind of think is best. So I have them plotted, at least the executions, with TradesViz. That was from yesterday. So that's all of our executions right here. So there's 1, 2, I think there's 7. Here are the actual trades right here. So we had 7 trades, 4 longs, 3 shorts. So we were pretty even all the way across. Our one trade right here, this one was small, 57 cents, but the rest of them were pretty sizable.
Mm-hmm.
That we pretty much traded all day long. Pull up the. Yeah, we ended up. I'll show you one more thing. We ended up $19.50, I think, yesterday.
Yeah, almost 20 points.
Right.
Yeah.
And then today we've had 3 trades. We're in a fourth. We're up $5.18. Working on another winner right now.
That's crazy.
There's our updated equity curve. You can see we had a nice 2 days. Big antenna sticking up.
Is that since we started trading?
That is since we started.
So look at that. We started. So let's say you started with
It starts with 5,000.
5K, and we would have been at 35K right now.
We're at 36,312.
And that's
One
you inputting
contract.
every trade into the system.
Every trade, one contract.
So you're telling me we made seven times 6 was it 7? No, 7 times 700% return since we started.
Yep.
And that's the underlying, folks. That's not leverage. That's not options. That's crazy. Okay. And how long ago did we start, Matt?
I believe we started in April.
Yep.
April 14th last year.
This is the program I'll be talking about this is the program I'm going to be trying to sell you in about 20 minutes. It's going to be a very easy sell. I'm going to tell you that right now. Let's just keep looking at this equity curve and the program will just sell itself. How about that? So, but I wanted you guys to see and we track every trade and we post every trade in the Telegram channel. So this is just trading. This is trading either the SPY or the ES. And if you're trading the options, your wins should be looking substantially bigger than this because this does not involve any leverage.
Yeah, and to that point, Roger, several people say, "Hey, can we use this to do options?" Absolutely.
Yes.
Absolutely.
Yes.
As a matter of fact, that's what
Yes.
you're going to want to do.
Yes, we're going to be talking about that in a few minutes. So go ahead, Matt. Take them through examples.
I'll just kind of go put the chart here. We don't really need to see the daily chart.
No.
So that's yesterday's chart. And then I'll just put the Telegram on. And we can just kind of go through each alert.
And this is Trading Zone Live. And I'll be look, I'm going to be pitching this in about 19 minutes. I'm just telling you that today's going to be the last day I'm going to be selling this, but I wanted you to see what we've been doing here.
Yeah, I figured the best way would just be walk you through it.
Yeah, walk them through it, please. He's going to do that right now, Greg. That's what he's getting ready to do.
Okay. All right, so we started yesterday with I believe we had kind of a flat opening. Yeah, we did. I mean, slight gap down. And the internals were not looking great. That was here. We started off strong price action wise, but the internals were saying, not going to happen. And we were coming right up into resistance. So at 939, we went short at 82.69. So we caught pretty close to the top right here at 939. So went short right here. Then here we took profit at 945, 944, 945. So I took it back down to the bottom of this range. We actually missed this move right here because I was not thinking we were going to have that much follow through on the downside. So we got out about right here. We took a nice gain. Took $2.20 or 22, 23 points on the ES. It was a good trade. We were happy with it. It was a nice way to start the day. And then we just watched this thing flush, which was very interesting because as that was happening, the internals were actually starting to get a little bit better. So when we got down here, what time we get? We got long at 10 o'clock. So yeah, so once we came all the way down here, we're actually coming on to support. We ended up going long right here because the internals were just really starting to scream to the upside. I thought this move was too much, too fast. We'd see a reversion. So we got in right there. This was our smallest trade of the day. Got in here. We got out at 10:11 because it kind of came back on us. So got in. We had this nice candle. Immediately started coming down. We went ahead and took profit because I didn't want to see this kind of thing. I didn't want to hold through another down move because we didn't know what was going on. So we ended up taking profit there. Next time we got into a trade was 10:16.
Folks, this is not Alpha Zone Pro. This is Trading Zone Live, just FYI. And by the way, the chart that Matt showed you does not take any leverage into account. That's just a SPY. SPY in, SPY out. SPY in, SPY out. No leverage whatsoever. Go ahead.
Got in at 677.65. So we pretty much got in right back here at 10:15. We got in at the bottom of this candle. We wrote it up. We're only in this trade. Let's see here. 4 minutes. Got in at 10:16. We got out at 10:20. So we wrote it up to VWAP and took profit quick, fast, in a hurry. Then we usually, if we get to an impactful level, we'll see what happens, right? Because sometimes we can blast through like we did here, and sometimes we get a hard rejection. So it's better just take the money, put it in our pocket. So then we waited. We saw we come back down here, got right back down to this level of support, and at 10:32 we took it. So
can you explain, folks, what made you take that trade right there?
This one?
Yes.
So we had a lot of support there yesterday. I wish I could show you on volume profile, but it moves. So you can't actually see that anymore.
When he's talking about volume profile,
I'm
he's
talking
talking
about this right here.
market internals. Yeah.
I'm talking about this chart right here.
But yeah, that's our market internals.
So we were on the edge of the value area, the bottom right here. And as you can see, the top side is serving as a good bit of resistance right now. So same thing kind of in reverse. So once we didn't flush there, we bounced there the first time. And we're like, well, let's see if we can catch a bottom here. So we took it. And wrote that one up for at 676.67. And the price action was just super strong. So this was our biggest trade. This was a $5.68 winner. So I think a lot of, including Roger, a lot of people thought I was a little crazy because I just kept holding the trade. So we got in here. Remember last time I got out of the VWAP. But the second time we got down here and we rocketed out of the same level, I knew we had a lot of buyers down there. And then if you watch this price action, we're closing almost at the top of the 5-minute candles every single time. And if you look at the 1-minute chart, it was even stronger. So if you have like the 8 or 9 EMA on there, we never crossed below it. Usually we'll oscillate around it, right? We'll go back and forth on it. Yesterday, during this move, we never crossed below it. So I knew that there was like, sometimes we get institutional buying coming in where it seems like there's just a buy program going on. It's just up and up and up and up and up and up and up, which really used to get us because we'd try to short it. We'd probably try to short it here. We'd probably try to short it here because it's with the trend. But if you can recognize this kind of buying, you can get really nice moves, which is what we did. So right here, we got up to the VWAP. This candle's actually pretty telling right here because yesterday I thought about taking it right here. But if you notice, we closed right underneath it.
Mm-hmm.
And we pulled back only like 20 cents and shot right through the VWAP with almost no resistance. I mean, like a knife through butter. And at that point, I was like, all right, well, buyers are really strong. So let's hang on to the trade. Same thing here. We got to this level of resistance. Closed the candle right underneath it. We did come up a little bit and we came back down, but we only came back down to about right here, pretty much right at the level. And then once again, we went right through it with no problem, no stutter step, nothing. So then we just held. This is the 50 period. That one's usually not super useful unless we're in a consolidative state, which we were not here. So but again, we shot right through that. So we ended up taking it at 11:15. So right here. So I did take it once we got up to the open because I figured that resistance probably going to have some sellers there. So we took it here. We didn't end up coming down, but we weren't involved in this drawdown. That was trade number 4. So that one netted us $5.68. We got out at 11:15, right here. Then we got back in at 11:37.
And remember, folks, we have a Telegram channel that has a timestamp for every one of these trades.
Yeah,
and
none
of them are revised. They're all right there. And we don't have a connect. There's no conspiracy between us and them. Everything is time stamped with the time. So, yeah. There's some good questions coming in as well. We do use stops. Sometimes we use physical stops. Sometimes we use mental stops.
With the SPY, you really have to make it price action based, but not price based. Because the SPY, as you can see, right here we had resistance, right? Let's say you were going to go short off this level right at the open. Let's say you got in here. For 10 minutes, we zigzagged back and forth this level. So if you had set your stop here, stopped out, stopped out, stopped out. Now the move was down, but trying to set a stop within 10 cents is very difficult, especially when you have this kind of volatility going on. So that's why, if you notice in the trading zone, I really like to use candle closes. That serves us a lot better because a lot of times those won't jerk you around as much. But hard stops are really difficult in a fast moving market.
Yeah, I mean, think about it. When it moves like this, 2 points a minute, it's going to get you. Now, can you explain to folks how you're tracking these? You're tracking this using the SPY, correct? Points on the SPY? Raw points on the SPY, right?
On the graph?
On the spreadsheet, on the graph, or
so
whatever.
The spreadsheet
yes,
has both.
That's what I thought.
So the spreadsheet has SPY entry and exits, and then the E-mini entry and exits.
So you could see very clearly how we're not leveraging anything by adding position size or adding contracts. We're just going net, 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 net.
Yeah. So the portfolio, which is the graph, is tracking one E-mini contract on every single position.
One, so not two, not three, not four. To open up a full E-mini contract, a micro or E-mini?
E-mini.
Yeah, to open up an E-mini contract, it would be the same. We're not leveraging anything. We're not saying we're starting. Basically, what I'm here's leveraging something. If we said we're starting with $500 and we have 37.5, that's leveraging. But we're starting with the margin requirement for one contract, and we're never going above that. So we're always just staying with one contract, okay, or one share. There's no leverage here, okay? We're not leveraging this at all. So you guys understand that. We're not taking it above that. We're just using one contract. Or if you don't want to use that, you could use the SPY, and SPY doesn't have any leverage whatsoever, okay? So that's how it looks. That's how that goes. So you could see the numbers right there, line for line. All right. Any questions? Any questions before we move on? Now, if I wanted to leverage this thing, what I could do is I could say, now we're trading 5 contracts. Now we're trading 10. We're not doing any of that.
Yeah, that's another thing. The way we're tracking this is actually hurting us because you'll notice if you're in the trading zone, some days when the price action is really crazy and let's say we're taking a mean reversion trade, I'll say use smaller size.
Right.
Because we can get run. And we've had a lot of big losers like that. Now, I'm not tracking smaller size in here.
Right. So the margin for one E-mini is $500, day trading margin, okay?
Right.
We started with $5,000, but we traded one contract. Or the SPY, which has no leverage at all. So my point is, what I could have done was saying, oh, we started with $5,000, we're trading 10 contracts. No, I'm not doing that at all.
Or we could have worked it up.
We're not doing that at all. It's just constantly one contract. Constantly one contract. My point, I didn't want to use leverage to show you what could be possible. I wanted to do this based on one contract. Not like, okay, once we get to 10,000, we're going to go to 2 contracts. Once we go to 5. No. And I could have started with 10 contracts, but I started with 1, and I'm still at 1 contract.
Yeah, this graph would be exponentially higher if we were.
So for anybody who understands, like, who went to kindergarten, they understand that I'm not using any leverage whatsoever. You could see it right there. Anyway, so just FYI. Yeah, but see, Peter, you did 10 contracts, but we do ours as 1. Always 1. So we're never leveraging anything on that. All right. Just wanted to make sure you guys understand that. So, and let me, Matt, are you done, or do you still have other things?
I mean, we have a couple more trades, but
go ahead, please. People really like this. And I'll show you folks an easy way to trade this in a second. Okay. Real simple. Leveraging means increasing your contract size. We're not using futures. We're trading futures with both hands behind our back. We're not increasing based on our margin. We're using a constant one contract size. Yeah, Melvin, you should be doing that. But
Yep.
we're not doing that here because we don't want to cheat.
Yeah, there's no compounding. Exactly.
Yeah, there's none whatsoever.
And the thing is this, folks, I hope you understand this, is that when Matt basically gives an alert to go long on the SPY, for example, you have a number of choices as to how you want to trade that. Okay, you could take the option on the SPY, you can trade the SPX, you can trade the EXP, you can trade the E-mini S&P or the micro E-mini S&P. Just off that one statement, go long SPY, because you are basically day trading. You're using zero dated options if you're trading in the morning, or one dated options if you're trading in the afternoon, and of course none of that applies if you're trading futures.
Right. Right. Go ahead, Matt. Go ahead.
See, so we took it up here, we got out. This trade, I think probably the next trade was probably the one where people were scratching their heads a little bit because we took this long. There was all this strength. And we got out here. We came back down to the 50 period. We actually bounced right off of it. But we went short right here, right after all that strong movement. And the reason we went short, besides the internals kind of flattening out, was we tried to break out of the opening range. We rejected. We came down here, and if you notice, we couldn't even get back up there to test it. So we went short. 11:37. We came down through lunch, and we got back out at the VWAP. So we made another 23 points there.
Yeah, that's beautiful.
And then we pretty much flipped it. Went long right here, right after this strong move off the VWAP. Rode this trend all the way back up for another 48 points, or $4.77. And then the last trade of the day was we were stalling out here. This trade took a little longer, but you could just tell that we really didn't have the appetite to move higher. We were running out of steam. It was getting later in the day. Buyers are starting to fade. So we went short somewhere around here, and we rode that short all the way down to the end of the day. And we got out right before the close for another $2 winner. That was all the trades.
Yeah. 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 So anyway, so that's where we're at right now. All right, folks. So now I'm going to answer some questions. I'm going to answer some questions. Let me take over the screen. Yeah, people are very, very happy about the performance. Matt, can you unshare your screen so that I could share my screen?
Yeah.
Thank you, sir. They're just moving choppy right now, not really doing anything. All right. So I want to show you guys something. So if you're trading the SPY, you could go right here, and you can go to tomorrow's option expiration. We always trade the strike price where we're at. So there's no in the money or out of the money, just whatever the closest strike price to where we're at. So it'd be 688, 689 right here. And it's already after lunchtime. So you would be trading one of these. Now, yesterday at this time, these options were about $3. Implied volatility was much higher. Today, they're not that expensive. So your average trade is going to be right here. Okay? Okay? And again, folks, as most of you know, as you're not supposed to be buying the SPY unless you have a huge account. You just buy the option, or you buy an E-mini or a micro E-mini, and that's all you would need to do. Actually, that's all there is to it. So really, really nice right here, or here you could. So let me show you guys this. Here, this is the SPY. Actually, here. This is E-mini right here. This is E-mini right here. And this is the SPY. right here. And you could see that their movement here, let me blow this up. And you could see that their movement is exactly the same. So you could choose to trade the SPY itself right here. You could trade the SPY options. If we use the SPY options instead of the SPY in the spreadsheet, your gains would be about 10 times bigger, but we're not doing that. We don't need to do that. Our gains are perfectly fine without it. And right here is the E-mini. So you could see that the E-mini movement is exactly that of the SPY. Look at this candle. Look at this candle. It's exactly the same. So if you want to start, you could start with $50 and trade this, or you could start with $200-300 and trade options on here. Okay, very, very, very simple. Really, really, really simple. And again, our spreadsheet just to make it easy and so that we're not cheating, all we're doing is we're just taking one contract and just continuously using that contract or just using points on the SPY. Just, again, there's no leverage on either of them, okay? In theory, we could have used with 5,000 10 E-minis to start with. We used one. The account now is at 37. We're still using one, okay? And again, that just gives us the way to trade this, an effective way to trade this. Okay, very, very effective way to trade this. All right, all right. So you don't have to have a huge account to trade this way. You don't have to start. You could start with a futures broker, or you could start with a stock broker. It's up to you. All right, all right. Look at that. The SPY is making highs. Are you short or long, Matt?
We're long.
Good, good. Excellent, excellent. Okay, so what I'm going to do now is I'm going to give you a class. Okay, I'm going to give you a class. And this is going to be the last time we're doing this class, but it will fill you in on all the blanks of everything we just discussed. And again, folks, between yesterday and today, we're up about 25 S&P 500 points, which is what I've been claiming and what I've been saying. And
And Roger, before we go much further, I want to let the people know that are with us on YouTube that now is a perfect time to come over into the Zoom room for the balance of this presentation. So once again, if you are there watching this in YouTube, come over to the Zoom room, join us here for the balance of this presentation. And folks, if you're already here in the Zoom room, there's nothing for you to do. Just sit back and relax and get ready for a great continuation of this discussion.